Here's a summary of AT&T's 2026 Q1 earnings call, designed for clear and concise delivery. Introduction. Good morning. We're here today to discuss AT&T's performance in the first quarter of 2026. I'm Brett Feldman, Treasurer and Head of Investor Relations, joined by Chairman and CEO John Stankey and CFO Pascal Desroches. We'll be referencing our safe harbor statement regarding forward-looking information. CEO's opening remarks. John Stankey opened by highlighting AT&T's strong execution in Q1, consistent with their outlook and demonstrating progress on strategic initiatives. He emphasized that their investment-led strategy in fiber and 5G is showing clear evidence of driving improved growth. Key highlight: customer growth and convergence. AT&T achieved its best-ever first quarter for total fiber and fixed wireless advanced internet customer net additions, with 584,000. This marks the sixth consecutive quarter exceeding 500,000 net adds. A significant trend is the acceleration of customers choosing both AT&T wireless and internet services. This convergence rate, excluding the Lumen transaction, reached nearly 45% organically, a 3 percentage point year-over-year increase, their fastest ever. Stankey noted that converged customers exhibit stronger brand loyalty, higher net promoter scores, and lower churn, contributing to improved customer lifetime values and account growth. Lumen transaction integration. The acquisition of Lumen's fiber assets was completed ahead of schedule, adding 1.1 million fiber customers and over 4 million fiber locations. Initial integration progress is positive, with sales activity exceeding pre-transaction trends in these new metro areas. They anticipate steady improvements in fiber and wireless customer growth in these acquired geographies in the latter half of the year. Product innovation and network advantage. AT&T launched the AT&T Guarantee for Internet Air and a new flagship app for a digital-first experience. They also introduced AT&T OneConnect, a single subscription service for fiber and wireless, simplifying connectivity. Stankey asserted that AT&T has established a structural advantage with its extensive fiber, over 37 million locations, targeting 60 million by 2030, and 5G network reach, offering superior performance and value. They are shifting focus from device subsidies to the inherent value of their network and converged offerings. Business enterprise stabilization. The advanced connectivity business saw service revenues stabilize year-over-year for the first time, driven by fiber and 5G growth offsetting declines in transitional services. AI-ready network. Looking ahead, AT&T is architecting its converged network to support the evolving demands of AI, focusing on massive capacity, ultra-low latency, and session control. They aim to operate the most advanced and open communications network in the U.S. by the end of the decade, built on dense metro fiber and nationwide spectrum. Vision for the future. Stankey expressed optimism, likening the current period to a consequential chapter in AT&T's 150-year history, positioning the company for its best days ahead. CFO's remarks. Pascal Desroches provided the financial details and outlook. Consolidated financials. Revenue. Total revenues increased 2.9% year-over-year, with service revenues up 1.4%. Growth is driven by fiber, fixed wireless, and converged accounts. Full-year revenue outlook. Expect consolidated service revenues to grow in the low single-digit range. Adjusted EBITDA, up 2.3% year-over-year. Adjusted EBITDA margin was 37.4%, a decrease of 30 basis points, partly due to a prior year vendor settlement benefit. Full-year adjusted EBITDA outlook. Expect growth in the 3% to 4% range. Free cash flow, $2.5 billion in Q1, at the high end of their outlook. This was a decline of approximately $600 million year-over-year, primarily due to increased capital investment of $5.1 billion for fiber deployment. Q2 free cash flow outlook. Expect $4 billion to $4.5 billion. Full-year free cash flow outlook. Expect $18 billion plus. Adjusted EPS. 57 cents in Q1, up nearly 12%. Full-year adjusted EPS outlook. Expect $2.25 to $2.35. Advanced Connectivity segment. Service revenues, up 3.6% year-over-year. Wireless service revenues grew 1.7%, driven by customer base growth, including 294,000 postpaid phone net adds. Postpaid phone ARPU was flat, consistent with their outlook of stable ARPU due to gains in value segments and converged accounts. Q2 wireless service revenue outlook. Expect growth to improve from Q1, maintaining a full-year outlook of 2% to 3% growth, driven by new plans, convergence opportunities, and recent pricing actions. Advanced home internet service revenues grew 27.3%, including 2 months of Lumen acquisition revenue. Organic growth was driven by customer base expansion, with 512,000 net adds, excluding Lumen acquisition. Fiber net adds, 273,000 in Q1. Internet Air net adds, 239,000 in Q1. Fiber reach. Expect to grow by about 8 million locations in 2026, including Lumen. Expect improved fiber net add trends throughout the year. Business fiber and advanced connectivity. Revenues grew 7.2%, and total business service revenues were flat year-over-year for the first time. Expect business service revenues to remain stable in the near term and grow at a low single-digit CAGR through 2028. Advanced connectivity EBITDA grew 5.6% year-over-year, with margin improvement of 30 basis points despite headwinds from lower margin equipment revenues and initial integration costs for Lumen. Full-year advanced connectivity outlook. Expect service revenues to grow 5% plus and EBITDA growth of 6% plus. Legacy segment. Service revenues declined about 25% year-over-year, consistent with the outlook for a 20% plus decline in 2026. EBITDA declined about 40%, with a larger decline than revenue attributed to the lag in discontinuing legacy infrastructure operations after customer migration. Financial position and shareholder returns. Net debt to adjusted EBITDA ended Q1 at 2.71x, up from 2.53x, primarily due to the Lumen transaction. Expect leverage to increase to approximately 3.2x after the EchoStar transaction, decline to around 3x by year-end 2026, and return to the 2.5x target range within 3 years. Liquidity. $12 billion in cash and $19 billion available under term loans. Shareholder returns. Returned $4.3 billion in Q1 through dividends and share repurchases. Expect to continue repurchasing stock and maintain a consistent pace through 2028, with a target of returning over $45 billion. Q2 acceleration. Desroches reiterated confidence in accelerated growth in Q2 and for the remainder of the year, driven by wireless convergence, pricing actions taking effect in April, continued scaling of Lumen integration, and the natural seasonality of free cash flow moving beyond Q1 headwinds. Key takeaways and outlook summary. Strong customer momentum. AT&T is experiencing robust customer net additions, particularly in fiber and through its converged fixed mobile offerings. Strategic investments paying off. Investments in fiber and 5G are driving a competitive advantage and are expected to continue fueling growth. Lumen integration progress. The early stages of integrating Lumen's fiber assets are promising, with positive initial results. Focus on value and experience. The company is emphasizing the value of its network and converged services, shifting away from a heavy reliance on device subsidies. Financial discipline and shareholder returns. AT&T is managing its leverage, generating strong free cash flow, and committed to returning capital to shareholders. Future growth drivers. AI readiness, network modernization, and continued expansion of fiber are key to long-term success. Future outlook. Consolidated service revenues. Low single-digit growth for the full year. Consolidated adjusted EBITDA. 3% to 4% growth for the full year. Free cash flow. $18 billion plus for the full year. Adjusted EPS. $2.25 to $2.35 for the full year. Advanced connectivity service revenues. 5% plus growth for the year. Advanced connectivity EBITDA. 6% plus growth for the year. This concludes our summary of AT&T's 2026 Q1 earnings call.